Okay, I'm here with Angus Gilfillan, who is the founder and CEO of finspo. Finspo is a major mortgage broking company. Excuse me, that's doing a lot of stuff online. G'day, Angus.
Hey, Angus, how's it going?
Good, going well, thank you. So today we're going to talk about how to manage the interest rate rises, what you can do, what the options are, as well as just general things about paying off your home loan, getting the most out of your finance, what to do if you want to refinance, all that sort of thing. So all things home loans, which is interesting in this sort of ever-present increasing interest rate environment. So along with interest rates going up, Angus, like you were just saying before, they've gone up like 4%. Is that right, over the last 12 months? Or
Yeah. So they've gone up 12 times in the last 13 months for a total of 4%. So the cash rate back in sort of May last year was 10 basis points, so 0.1%, and we're now up to 4.1%. So we're seeing a lot of pressure on Australian household budgets and much more of people's income going back into servicing their home loan or their investment property. Mm-hmm. So yeah, it is pretty tough out there at the moment.
Yeah. Okay. So what are people doing? Like, is it mainly they're coming to you for refinance? Like, what are the main things they're coming to you for?
Yeah, sure. So look, there's probably three big trends that are happening in the market at the moment. So the first is we've had this big increase in interest rates over the last year, and quite unexpected. And what that's doing is, as I said before, it's causing a lot of pressure on household budgets, but it's increased people's repayments by about 60%.
Yeah.
So it's putting a real pressure on the family budget, and that's leading to people trying to find opportunities in how they can save. And there's probably a few ways you can do that, but interest rate rises on their own are causing pressure. We've got a lot of people coming off fixed rates as well. So during the pandemic, there were a lot of low fixed rates in the market, sort of around 2%. Now people are rolling off onto 6.5%. So again, that same big increase in interest rates. Mm-hmm. And then the third big trend is just the old loyalty tax in mortgages. So new customers are continuing to get better rates than existing customers, and on average, that's around about 0.4 to 0.41% on their home loan. So if you wrap all that up, it really is that there's a lot of pressure on costs. People are looking to see if they can refinance, save some money, get a cash back, or reprice with their existing lender so they can reduce the amount they're paying on their home loan.
Yeah, sure. Okay. So does that mean if someone wants to refinance, like they're classified as a new lender and they're going to get that discount with another bank?
Yeah, absolutely. So the best thing to do is to speak to a broker like finspo who can scan the market for you and find out what rates are available. Yeah. But if you've been with your current lender for over a year, and if you haven't had your price reviewed, you're probably paying more than you need to. So it unfortunately is a feature of the market that competition will keep bringing price down at the front, but the existing customers tend to help pay the bank's profits by not coming down at the same rate. Yeah. So absolutely, refinancing is the best way to see what is available in market. Yeah. And finspo will look across over 30 lenders to see what's available. What's a bit trickier at the moment is this phenomenon of the mortgage prisoner, and I'm not sure if you've heard of that one, Angus, but a lot of people were assessed on lower interest rates several years ago, and as interest rates move up, they're finding it more difficult to get assessed for a refinance mortgage. Right. So you may have heard of sort of serviceability, and can you service this new loan, which is just the bank's way of saying, can you afford this new loan? Yeah. And so if you were able to afford it back when rates were 2%, but they're now up at 6.5%, sometimes people are finding it trickier to actually get their home loan refinanced. So this term of the mortgage prisoner was in came to market.
Yeah, right. Okay. So if you refinance your home and you get this cheaper rate, this 0.4% or whatever it is less, does that stay for the length of the loan, or like when there's a next rate rise, or like after a 12-month period, does the bank that you've moved to, does it generally put it up so that you end up paying what you were before?
Yeah, good question. So the discount you get will be for the life of the loan. So that is a genuine saving, and it is a genuine difference.
Yeah.
The reason why we get this differential between new and existing customers is because in the past, when there has been RBA rate changes, sometimes banks or lenders have increased rates by more than what the RBA has put on. So if the RBA might have gone 25 basis points, sometimes lenders might have gone 35 or 40 basis points.
Yeah.
But they generally would have done that for existing customers, not for new.
Right.
So because the existing customers are not in market shopping around, they end up copying the bigger price increase, versus the new customers who are shopping around don't get that. So that's how you get that differential over time. But yeah, so it's a phenomenon of the market, not just because you've moved lenders and the lenders moved your specific price; they've moved the whole book's price
for all new ones. Yeah. Okay.
Yeah.
I see. So if you're saving 0.4%, like what's sort of the average home loan that you see?
Yeah, so the average home loan we see is about $700,000.
Right.
So so 700,000 by, I'm just get you the exact number here. It's
2,800.
2,800 per year.
Yeah.
And then if you also can combine that with a cashback, which you get in the first year, then it can mean quite material savings, particularly in that first year, and make it really worth your while doing. There's not a lot of other things you can do that can just save you, $2,800 that year and every year into the future. So absolutely, my top tip would be to know what rate you're paying and know what you could get from a different lender. Yeah,
okay. And so that cashback, like how much do you get back? Is it $1,000 or $2,000 or something like that?
Yeah, it varies. There some good cashbacks in market at the moment for up to $4,000.
Really?
So a number of lenders are removing the cashbacks. So you might have seen that in the press over the last few weeks, that sort of the death of cashbacks. But there are still lenders available, particularly if you apply by the 30th of June. Most of them are still available, but even post 30th of June, there are a number of lenders that you can still get a cashback from. So the way I put it, I wouldn't move just to get a cashback like that. That's probably not the way to think about it. But if you can find a lender that suits your needs, has the right product, the right characteristics of the firm, if you save money on the actual home loan, then I think the cashback just kind of makes it all worthwhile, because everyone knows it takes a bit of time to move your home loan. So if you can get a cashback to help make that worth your while and then save into the future, I think that's definitely worth looking at. Yeah,
it's good. So you're right. You're not going to save $2,800 on anything else in sort of one sort of transaction. So it's a big saving, especially if it keeps going year after year. 5 years' time, it's nearly $15,000.
Absolutely, and we're seeing probably more investors come in and look to have their home loan repriced than we have in the past. So I think Australians with an investment property have been a little bit less price sensitive in the past because of the tax deduction with the interest, and lenders have taken advantage of that to some degree, because interest rates on investment purpose lending have been going up faster than owner occupied.
Yeah, right. Okay.
But as we're seeing capital growth rates come down a bit, negative gearing's not quite as attractive as it was. We're certainly seeing a lot of people with investment properties come in and have their home loans looked at and refinanced to cheaper rates, and saving significant amount of money through doing that as well.
Yeah, right. Okay. So does it cost money typically to refinance? Well, when I say cost money, like transaction costs, leaving costs, application costs and all that?
Yeah, absolutely. So look, there are some costs involved. So you need to take that into account in all of your calculations. So typically there will be a discharge fee. Sometimes there can be some other fees and charges involved.
Yeah.
There might be an application fee. So you really need to take all of that into account, but it won't be anywhere near generally won't be anywhere near $3,000 or $4,000 you'd get from a cashback.
Right.
Typically those costs would be under $1,000.
Okay.
So if you can, get a cashback that's north of $2,000, it'll absolutely be worth your while.
Yeah, right. Okay. Well, that's good. That's good. Because I think the government tried to make it easier a few years ago for people to move their mortgages because it was just so hard. So has that come to fruition? Like, is it, like, in terms of the process, is it relatively easy to do?
Yeah, look, it is easier than it has been. So there is certainly work involved, but companies like Finspo are trying to make the process as easy as possible. So the way we operate is we'll have our first meeting similar to this over Zoom, but the client would have filled out some basic information before the meeting around what they're trying to do, some high-level financials.
Yeah.
The broker or expert would then have the conversation with the client around what they're trying to do and how achievable that would be.
Yeah.
And then the next steps would be to provide some documentation around their financials. So it might be some pay slips or income details.
Yeah.
And then the second meeting would be what we call a recommendation meeting. So the expert would speak to the client, recommend one lender, show a couple of others, and outline all the fees and charges, costs and savings involved. So you get a really good picture of how much you'd save. And once the client accepts that recommendation, it then moves through the application process.
Okay. So that's not too bad.
So it's basically I'd say 2 meetings before you decide, yep, we're going to go ahead.
Yeah.
And they can be from the comfort of your own home.
Yeah.
And then after that, the process takes really care of itself, or Finspo takes care of the process.
So all you need to do is really have a couple of meetings and sign a mountain of paperwork and you're done.
Yeah. And we try and make the signing a bit easier through DocuSign and only get the exact information that we need for your home loan application. So we've got some really good technology that identifies, based on the type of client you are and the type of loan you're looking for, exactly what documentation we'll need. And that's all automated in our process. So you don't do more work than you need to, but there is some work involved.
Yeah. Hopefully you guys do most of it.
Yeah, absolutely. Yeah.
Yeah. Okay, good. So what about for people who are running their own businesses? How are they going in the market, given, they don't necessarily pay themselves fixed wages? They might get trust distributions, they might be sole traders. They might run a company and not pay themselves a big wage. Like, what do they do in this market? Is there anything they do differently? What are the lenders like towards business owners? How does that work?
Yeah, and look, some lenders are really good with business owners, and some are terrible and just don't understand them. So at Finspo we do mortgages for consumers, but we also do some commercial lending as well. So we have some really experienced brokers that can deal with both. Yeah. And we know which lenders are the best ones to go to for self-employed. Yeah. And we also know that some of the lenders have a specialist assessment queue set up who really understand that space. Yeah. And we'll be able to get a much better hearing and chance of approval with some of those lenders. Mm-hmm. But it is similar to other parts of the economy, right? Where costs are going up. And on the personal side of your balance sheet or P&L, it's getting more expensive, but also for your business it is as well. So it is a bit of a tricky time for people in business. So making sure you can pay as little as possible on your home loan is really important. Yeah, for sure. Okay. I think probably the other big phenomenon we're seeing is the impact of the increased rates on people's borrowing power. Yeah. So sort of a rule of thumb I used to use for how much people would borrow would be what's called the DTI ratio, so debt to income ratio.
Yeah.
And so the last 5 years sort of would be sort of 6 to 7 times your DTI would be your borrowing capacity. So if you earn 200,000, then it'll be 1.2 to 1.4 million around would be your borrowing power.
Yeah.
I think that's probably come down by about 25 to 30% over the last year. So we're finding a lot of people are coming in for getting pre-approval to buy that investment property or to buy their first home or upgrade. But they're having to recalibrate a bit their expectations on how much they could borrow versus perhaps what they could have borrowed a year ago.
Okay. And what are house prices doing?
Yeah, so house prices have been pretty resilient to date. So turnover's down, so there isn't as much turnover as historically would be normal.
Yeah.
So I think there's a little bit of a process, a bit of a standoff at the moment between vendors and purchasers. So purchasers can't quite borrow as much as they used to, and vendors maybe haven't quite accepted the reality of the prices. There might be a bit of downward pressure. Yeah. So it'll be interesting to see what happens in the sort of spring property market when we do expect to get quite a bit of turnover happening. And I think we'll see some clearing coming through in terms of pricing.
Yeah, right. Okay, that's good. So getting back to this interest rate problem, with the rates going up and people coming off fixed rates. So if your fixed rate's expiring, what's the best approach?
Yeah, so historically around 10 to 15% of all home loans were fixed rates.
Yeah.
But during the pandemic years, it was up to 45%. It's almost half of everyone's new home loan was on a fixed rate. So there is a huge portion of people on fixed rates that are coming off, a lot of them coming off now. So the worst thing you can do is just do nothing and just roll on to your variable rate that your bank will give you, because what they tend to do is give you the existing customer rate, not the new customer rate.
Yeah. So
it's really important to find out what rate you are going to roll onto, and then compare that to what's in market. And speaking to a broker like Finspo will help you do that. We'll help you understand what you're going to roll onto. We'll also help you assess what you can get in market and what cashbacks are available. Yeah. And unfortunately we won't be able to get you back to 2%, which we wish we could. Yeah. But we might be able to move you from 6.5% back below 6% or something like that. So we can make the pain a little bit better than it otherwise would have been. Yeah. And make sure you're not paying more than you need to.
Yeah. Yeah. So what's the lowest rate there is in the market at the moment?
Look, I'll just a quick look.
But it's just a bit below 6, is that roughly?
Yes. Yeah, so because there are a number of lenders are still putting on the last interest rate rise. I think it's in the mid to high 5s.
Okay. Yeah. Yeah.
So 5.64 is the current lowest carded rate we have on our panel.
Yeah. Yeah.
But obviously we go to the pricing desks of all the banks and make sure we're getting the best price we can for each customer.
Yeah. Yeah. Okay, good stuff. So tell me a bit about Finspo. Some people might have seen the video that we did about a year ago. They might know a bit about it, but a lot of people won't. So just go over a bit about what it's all about.
Yeah, sure. So I used to run home loans at NAB and at ANZ before that, and I just know there's an easier way to help customers get home loans, but also pay less whilst they've got a home loan. So that's why I started Finspo. It's actually almost 4 years ago now, which has flown by. And what we try to do is bring the best of digital along with the best humans in the business to give you a great experience. So how can we make every step of the process easier using digital technology. So gathering your information, meeting with you in ways that's really convenient, keeping you up to date through things like our application tracker, so you can see exactly where you're at in the process. But then having an expert in your corner for the really important conversations, because we know that you can make the process as easy as you like, but these are still really big decisions that you want to speak to somebody who knows what they're talking about at some really critical stages. Yeah. So, what loan is suited to me? Why is that loan suited to me? What other loans have you looked at? Is this the right structure for me, et cetera, et cetera. So we try and bring the best of both worlds. We've got a really great customer proposition in market now. Get some really wonderful feedback from our customers. We're almost at $1 billion book now. So originated a lot of home loans for Australians and saved them a lot of money. The team has grown. So we're based here in Abbotsford. So everyone's onshore. We've got a team of 45 people now, and that's made up of brokers and guides who help with some of the admin, as well as our technology resources and developers and designers. So we're constantly working on the process and making it better. Next step in our evolution is thinking about how do we automate some of the broker advice. So it'll still be delivered by our brokers and they'll still have big say in which loans are getting recommended, but how can we use technology to automate some of the serviceability calculations, some of the looking at all the different policies across the different banks, the serviceability calculations. It's still a very manual process to do that for our brokers. So we think there's a good opportunity to leverage technology to do that. But we're scaling, growing quickly, but we'd love to help more Australians save money. So really encourage your clients to reach out, because we have a special relationship with Angus Morrison accounting. So it'd be great to have your clients come and touch base so we can help them save some money.
Yeah. So how do they get in contact?
Yeah, so they can either go to finspo.com.au, so finspo.com.au, or Angus, they can let you know that they'd like to speak to us. Yeah. And then if the referral comes via you, then the client can click some privacy waivers, which means that we can then share the progress they're making at each stage with you, Angus, make sure that they're up to date. But you can also share with us some of the financial information, so that again, just make the process easier.
Yeah, cool. Yeah, pretty used to doing that. What a clients.
Yeah.
I've lost my notice of assessment. Can you please? Pretty common. Anyway, all good. Well, that's terrific. Well, thank you very much for taking me through all of that. It's interesting that you can save a few grand. Pretty much the average borrower will be able to save a couple of grand, or just by reaching out, having a couple of meetings, and signing a fair bit of paperwork. So probably worthwhile. So I'll definitely be recommending it to my clients. And hopefully interest rates come down as well, and everyone can breathe a bit easier.
That'd be nice, wouldn't it?
Yeah, be good for everyone. Good stuff. All right. Thanks heaps, Angus.
Thanks, Angus. Good to see you.